of this Coinbase BlackRock news, Brett?
So it does seem to be that the winter is starting to thaw here. Prices are obviously rising, and what are we actually seeing here? A lot of these sort of forced liquidations in the market, they're starting to come to an end. No more news about different either exchanges or lending platforms going under. Voyager is returning funds. Large undeployed venture capital is starting to be deployed again. And then, of course, this news coming out with Coinbase and with BlackRock showing that the institutional demand to be able to trade crypto through some of the more traditional huge players in the market is not slowed down. And in fact, as the saying goes, that this is the time to build. People are obviously building now. And as we start to come out of this winter and people are trading again, the tools, the capital will be in place to do so. And of course, all of this against the backdrop of more progress in Congress. Stabenow Boozman coming out with their big crypto bill, a lot of positive signs around that, all in bringing positive sentiment to crypto markets and to the equity markets that are relating to crypto.
Still, you've got Coinbase and Robinhood slashing their headcount. What mistakes do you think these companies made when they were scaling?
Looking across the growth tech sector, there are so many companies talking about either layoffs or hiring freezes. I mean, everything from, yes, Coinbase and Robinhood, but also Google and Microsoft and Tesla. I think there's a real lesson learned here, which is that these growth companies, which typically have operated under the model that headcount growth is a sign of company growth, are realizing that actually sometimes headcount growth can get in the way of company growth. If you don't have a lean staff where you can prioritize the most important build outs, where you can get things done, you can move nimbly with a market that moves extremely quickly like crypto, it's going to be difficult to keep pace. And when there's a winter and things are slowing down, retail volume is drying up, and you have to focus on the most important things, that means you'll have to pull back on those employees, which can be devastating to build up this giant workforce and then have to lay those people off who have worked so hard for their company. I mean, that's why I think that companies like FTX, but of course, we're not the only company to do this, showing that you can operate with a leaner model, with a smaller team, and really be able to focus on the highest priority items at all time and get things done is super important for you to be able to weather even the downturns in the market.
FTX has been really acquisitive through this winter, and I wonder if winter is starting to thaw, how does that impact your strategy around deals? Do you expect valuations to stay low or start to creep up? And could that mean less opportunities?
Yeah, absolutely. I mean, as you said, during this past, let's say, couple of months, there have been a lot of opportunities presented to us as far as potential deals with, either companies that are looking for capital injections. They need help, getting back in business. There's possible merger opportunities, lower private equity valuations. And yes, as investor confidence starts to come back into the sector, I mean, those opportunities will start to dry up as, these companies will start to get their volumes back. They'll start to get revenue again. They'll want to, be able to increase their, existing pipeline of projects and capital in the same way they were before. But there's still plenty of opportunities in the market, and certainly ones that we're looking at.
FTX is expanding its no-stock trading fee to all of its U.S. users, including non-crypto investors. What's the end game here? Is Robinhood a competitor or still a potential target for some kind of stake?
I mean, it's certainly the case that they're a competitor. I mean, they've been a competitor for a while. When they started out in the stock trading business, and then they added crypto, they added the ability to trade Bitcoin and Ether on their platform. They've since been adding more and more assets. I think just today they added Avalanche. And so they have realized that their customer demand for retail crypto trading is incredible. And so they've been a competitor to us for quite some time. What we've realized is that we can do a great job providing a stock trading platform to our users as well. We can do so without relying on payment for order flow. We can give people more advanced analytics and tools to be able to make smarter investment decisions. We want to make our platform more one that is involved with, educating our users on how to make, how to do trades in a responsible way, as opposed to being more kind of gamified. And so in that sense, we think that we have a good shot at competing with them on this platform. And we're pretty excited about all of the initial user growth that we've seen in trading stocks in FTX US.
You've also, made a number of different sports partnerships. Your name is on some arenas now, partnership with Major League Baseball. How much are these sport partnerships, sponsorships actually paying off?
Yeah, it's hard to put a quantification on that number of exactly how much it's paid off. We think that from a qualitative perspective, it's been tremendously important for our brand. Think about that 1 year ago, almost no one in the US had heard of FTX US. We were going up against, Coinbase and Kraken and Gemini and different companies that have been around for a decade. And in an industry that requires the trust in your brands that cryptocurrency does, with all the noise out there, with exchanges going down, with hacks, with the scams, you have to establish that brand presence, especially in the United States. And for us, doing things like partnering with the Major League Baseball or putting our name in the FTX arena basically catapulted us into the public consciousness in a way that going this more traditional advertising route, such as Google ads or Facebook ads, wouldn't have been able to achieve in such a short period of time.
So what is it that FTX has done right, or so much more right, than some of these other exchanges and crypto companies that are struggling?
I think I want to say it's more right. I think it's that we found our niche, which is that there was a really growing need for a great platform for institutions. There's a lot of platforms that built up around making it very easy for the average consumer to buy, $17 of Bitcoin from their phone. But for those very large traders, either the large, individual retail people, or the hedge funds, the high frequency trading firms, the market makers, they needed to be an excellent platform where they could be sure that it was going to be up 24/7, that the risk systems were always intact and working well for them, that the actual platform itself from a user interface perspective lent itself to that advanced style of trading. And that's how we got onto the scene, is by going the institutional route. That's why with far fewer customers globally than, let's say, someone like Coinbase, we have greater volume because the average volume per customer is that much greater. And of course, now we're definitely interested in moving into the consumer sector as well, with our app and with mobile stock trading. But that's how we sort of found our niche and been able to grow our business.